the adoption of gold and the adoption of Bitcoin, both are going much higher, and I don't think it's going to stop anytime soon because we're about to get rate cuts, more money printing, and people are going to realize that the problem that they're running from is only about to get worse, and therefore they need to put bigger and bigger allocations into Bitcoin and gold. September's going to be an up month for stocks in Bitcoin. Why?
Let's start with the headline. Central banks are buying gold at unprecedented levels. Traditionally, gold made up about 10% of central bank global demand. But last year, that number jumped to 20%, effectively doubling. In fact, gold has now surpassed the euro as the second largest reserve asset held by foreign central banks. This is historic. For decades, central banks favored fiat currencies, dollars, euros, yen, and others, because they issue, manage, and operate in fiat themselves.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Central banks have been buying a lot of gold. Last year, central banks were 20% of global demand for gold. Historically, it's only been 10%. So it's 2 times more on a percentage basis. And what we have seen is that we have seen gold last year surpass the euro as a reserve asset for foreign central banks. This is a big deal because historically what we have seen over the last 2 decades or so is that fiat currencies, those were the chosen method for storing value for these central banks. They're in the business of holding, issuing, playing with fiat currencies, so naturally that's what's in their reserves. Gold, they never left, but it was a smaller percentage. That has completely changed. And now what you get is you get the fake world, the fiat world. The fake world is being kind of replaced or is being eaten into by things that are real, things like gold, Bitcoin, etc. Now with central banks in particular, as they have kept buying gold, that is a persistent demand for gold. So gold is up from the start of 2024 till today about 70%. For an asset that is usually pretty stable, and that's one of the attractive features of it, the fact that it's up 70% in a little over 18 months, it's pretty incredible. This is like a historic run for gold. Now, why is it that gold is going up? Well, it's because you have governments that are printing a lot of money. You have interest rates that are colluding with the printing of money. Around the world, you get a lot of interest rate cuts right now, even though the U.S. is fighting it, right? Globally, there's a lot. You get the issue that occurred in 2022 when the United States of America decided that we were going to go and we were going to unilaterally seize the reserves of Russia. Now, whether you agree with that decision, not agree, whatever, but the implications of that meant that no longer was the US dollar and treasuries going to be a neutral asset. Jeff Park, CIO at ProCap BTC, he's got a fantastic piece out talking about this specific thing on there. I highly recommend people read it. Now, when you think about all of these different components that are feeding into central bank demand for gold, what people are really saying at these central banks is we need to have more allocation to a sound money principled store of value. Now, that doesn't mean the dollar is going away, right? The dollar is still the #1 reserve for these foreign central banks. Gold is just now number 2. It used to not be number 2. So gold's been moving up, but the dollar is still king when it comes to foreign central bank reserves. Bitcoin one day will be in the mix. Not yet, but it will be in the mix. Now, why is gold 70% up and you say that Bitcoin is flat? Well, it's all about relative performance to expectations, not necessarily to other assets, because Bitcoin is still destroying all of these other assets. Bitcoin was $70,000 in November of 2024. It's now $115,000. So it's appreciated quite a bit. Now, on top of that, Bitcoin was $40,000 in January of 2024. So Bitcoin is up almost 300% in the same period that gold is up 70%. So yes, gold is up a lot compared to its historical kind of volatility. Bitcoin is up a lot compared to gold, but people expect Bitcoin to go up hundreds of percent every single year. And so when it doesn't do that, then people start to think, oh, why is Bitcoin not up more? Oh, I thought that Bitcoin should be up more. Gold's up 70. Why isn't Bitcoin up 1,000? Right? That's kind of what we're starting to see. So it's always very important to separate yourself from the feelings over the facts. And the facts are that Bitcoin's up a lot in the same period that gold's up a lot. Why? Because not only central banks, but companies, investment firms, individuals, organizations, nonprofits, everyone who can allocate capital is realizing that holding dollars and bonds is a losing trade, and therefore they want to hold sound money principles. And you're watching that play out with the adoption of gold and the adoption of Bitcoin. Both are going much higher, and I don't think it's going to stop anytime soon because we're about to get rate cuts, more money printing, and people are going to realize that the problem that they're running from is only about to get worse, and therefore they need to put bigger and bigger allocations into Bitcoin and gold. September is going to be an up month for stocks in Bitcoin. Why? Everyone thinks it's going to be a down month. The second everyone gets off sides and thinks something's going to happen, immediately I started thinking maybe the opposite has higher odds. Now, again, doesn't always work, right? There are times where people have heard me. I had a similar thought when nobody thought they could balance the budget. I said, ooh, there's probably higher odds that they could balance the budget than people are giving it credit for because everyone is so convinced it's impossible, right? I don't think that's true, right? So I saw what was happening, right? I changed my mind. I don't think we can get to a balanced budget. September up, I mean, that's not that crazy, right? Especially because we were down in Bitcoin from the all-time high on September 1st. So our entry price into September is much lower. So I think that we could have a up September and a up Bitcoin because one, you got that entry price. Two is you're gonna get the rate cuts. And I do think that that'll be pretty bullish. And then three is I think that there's a lot of people who just are convinced like, oh, it's always down.
But doesn't that create the flywheel effect of it always being down? People think, okay, cool, it's going to go down. Let me sell my stuff now. And then it proceeds to fall even farther.
So yes, the question is just, are people going to sell because of that? Right. I think the month of August was this past month was the first down month for August in the year after a halving in history for Bitcoin. I think that's true. So like, well, August is always up in the year after a halving, right? So for 15 years that's happened. Well, it didn't happen. So September, right? Could we get the opposite effect? Again, 75% confidence, like that's pretty high, but I'm not 100% confident in that. And so I just think that people, when you start to see people regurgitating the same thing, and I see people all over the internet, September's down, September's down, September's down. Like, well, what if it goes up? Well, why would it go up? Well, you have interest rate cuts, people are off sides, all this stuff. Like, okay, that could be interesting. So I do think that people just got to be very careful with looking at history and saying this always happens. Usually by the time people start to identify this always happens, usually is about the time where this always happens becomes that used to happen. Now we're doing something else.
Pompliano remains laser-focused on Bitcoin as the most resilient long-term asset in the crypto ecosystem. He acknowledges that altcoins like Ethereum or Solana may succeed in the short to medium term. Some have built strong developer communities, captured attention, and created useful applications. Ethereum, for example, remains the second largest blockchain despite years of criticism, but when thinking in 30 to 40-year horizons, Pompliano sees Bitcoin as the only truly anti-fragile asset in the space.
You got to be able to buy things that have a long-term value kind of accretion to them, right? And I think that is, again, from my investing philosophy, from my perspective, I think that Bitcoin, more so than anything else in the entire crypto ecosystem, is most likely to have resilience and to be anti-fragile and continue to appreciate over a 30, 40-year time period. I don't know what happens with the other ones. Some of them are going to win, some of them aren't going to win. There's going to be competition, there's going to be upgrades, there's going to be improvements, whatever. Anything that I've ever done outside of Bitcoin, I look at it in terms of it is something that is a more short to medium term expression of a view, more so than anything where I'm going to hold it for a long period of time. And I think that is, that's the question, right? Is these other altcoin treasures, not just Ethereum, there's now Solana ones and many others. What happens over the long run? Nobody knows, right? I would argue that there's plenty of people who have predicted the demise of Ethereum as the second largest blockchain for a long time. Hasn't really happened, right? Doesn't mean that Ethereum's outperforming Bitcoin in Bitcoin terms. but it also doesn't mean that Ethereum is going to go to zero, right? And has anyone built anything that's bigger from a market cap basis? No. So maybe one of the lessons is like first or second mover advantage is really powerful because it was able to capture a lot of capital and a lot of attention, make a lot of progress and developers and all this stuff. Because the first one that was ever created is the biggest, the second one ever creates the second biggest. That could change. But right now, actually being early seems to have been an incredibly important part of being successful over the long run in terms of getting scale. But China and Japan, I think, used to be the like 7th combined buyer of treasuries or something like that. Like they were a very big buyer of US debt. Now they're like 22nd. So they have significantly fallen in terms of their demand for buying. Doesn't mean they've stopped, but it just means they're buying less than they used to. They've also been buying a lot of gold. And so I think that you are watching this kind of reallocation or rebalancing occur. Now, in terms of our friends, sure, there's plenty of central banks that still hold dollars, number one reserve asset in the world. But what people are looking at is, what's the interest rate I'm getting on that? So if you have, think about it, if you're a nonprofit with responsibilities and liabilities, if you're a pension fund, if you're an endowment, right? Like the fixed income is actually pretty important. The problem is that the Fed has been telling people that we have a 2% inflation target. First of all, they've been completely off on that. Hasn't been 2% since like 2020, right? So the Fed not only is not doing their job, but on top of that, if you go all the way back to 1971 when we came off the gold standard and you look at the dollar debasement over that time, we've actually been debasing at about 4%, not 2%. So, okay, why is that important? Well, what is the Fed funds rate right now, right? It's not much more than 4%. So now all of a sudden you start asking yourself, wait a second here. On a real return basis, because we know that if that's the period of debasement from 1971 to today, but the US dollar has lost 30% of its purchasing power since 2020. That means we're accelerating the debasement. Wait a second, if I'm holding treasuries, I'm not making a real rate of return. I'm actually getting paid a negative real rate of return. So I take what am I getting paid plus the currency debasement or minus the currency debasement, that puts me negative. So it means if I hold treasuries, I'm actually losing money. So there's only one of two reasons why you would hold treasuries for the most part. Either one, you don't know that this is happening and you're just not that smart. And so you're taking a negative real rate return on the chin, and that's not good.
Finally, Pompliano highlights a broader global trend. Countries like China and Japan, once among the largest foreign buyers of U.S. treasuries, have significantly reduced their purchases. Instead, they're buying more gold. This marks a global reallocation away from debt-based assets and towards scarce, tangible value. The message is clear. Around the world, governments, institutions, and individuals are gradually hedging against dollar debasement and U.S. fiscal dominance.